Real estate investors, what if I told you you could qualify for investment property financing without tax returns, W2s, and pay stubs? That's right, a DSCR loan, that stands for debt service coverage ratio. Your ability to qualify isn't based on your personal income at all. Instead, it's based on the cash flow of the property itself. So, in the next few minutes, I'm going to break down exactly how the DSCR loan works and how they become one of the hottest tools for investors and how they can help you scale your rental portfolio faster than ever before. All right, here we go. A DSCR loan is designed specifically for real estate investors. Unlike traditional loans that require you to prove personal income, like your W2s, your pay stubs, your tax returns, a DSCR loan is looking at one thing and one thing only. Can the property pay for itself? In other words, if the rental income covers the mortgage, the taxes, the insurance, you can qualify. There's no income verification, no employment history required, just the property's numbers. So if you've been in the game for a while, you know how frustrating it is to show your bank your tax returns, and between the write-offs, the depreciation, and business expenses, your taxable income often looks way smaller than your real income, and that kills traditional financing. DSCR solves that. It doesn't care about your write-offs, it doesn't care about your adjusted gross income, it just cares about whether the rental property cash flows. That means self-employed investors, entrepreneurs, and people with complex tax returns now have an easier path to financing. So how does it actually work? The key number is the debt service coverage ratio. It's simple. Monthly rental income divided by monthly housing expense. That's PITI, plus if there's any HOA, if any. If the property rents for $2,000 and the mortgage is $1,600, your DSCR is 1.25. That means the property brings in 25% more income than it costs to own. Most lenders want to see a DSCR of at least 1.0 or higher, which means the property pays for itself. Some will go lower, but that means you just have to put a little bit more down. The ratio is what determines your approval, not your personal debt to income ratio. So here's why DSCR loans are a game changer. No personal income docs. Forget about those W2s, the pay stubs, the endless tax returns. It's easier for self-employed, and if you write a lot off on your taxes, not a problem. The loan does not care. There's faster approvals, less paperwork, means quicker closings, and speed matters in competitive markets. So scale faster because your approval is based on the property's cash flow, not your personal DTI. You can add multiple properties without hitting an income ceiling. So flexibility property types, DSCR loans can work for single family homes, multifamily, short-term rentals, and even Airbnb properties in many cases. DSCR loans aren't for everyone, but they are perfect if you're a self-employed investor with strong rental income, but maybe a low taxable income. You may want to buy multiple rentals without running into personal income limits. You're building a portfolio. It needs speed, flexibility, and scale. Now keep this in mind. DSCR loans typically require larger down payments than owner-occupied loans, so usually 20 to 25%. Rates might be a little bit higher than traditional mortgages too, but for many investors, that trade-off is absolutely worth it because it unlocks the ability to scale faster without the red tape. So let's recap. With a DSCR loan, you can qualify for investment property financing without the tax returns, your W2s, and your pay stubs. The loan approval is based entirely on the property's cash flow. That means if the numbers work, the deal works. Period. End of story. If you're serious about building a portfolio and you want to explore how the DSCR financing can help you scale, send me a message today. I'll run the numbers, show you exactly what you qualify for, and help you find the right program. Don't let tax returns or paperwork slow you down. With DSCR, the property qualifies you, and that's how you grow your investment business faster.